fintech startups in sub-Saharan Africa are defying challenges, with more than half of Africans unbanked or even underbanked. Now, there's an opportunity for fintech to digitize payments. The African electronic payments market is set to grow by 20% annually, reaching 40 billion USD or 6 trillion Kenya shillings by 2025, outpacing the global industry's 7% growth. Progress varies across countries, with Kenya leading the fintech charge. Factors driving growth include rising smartphone ownership, lower internet costs, increased bandwidth, urbanization, and a growing youth demographic. David Olilo, as I mentioned, is a fintech expert and joins us for a discussion on the future of transactions. David, thank you so much.
Thank you for having me.
Can I call you David of all trades? Because you have quite a journey. You've done all these things. You've been in the tech startup scene, and now you're the Chief Operations Officer at EatOut Kenya, I have to mention.
Yeah.
You're also a pioneer, or rather someone who's very, very experienced on matters fintech. So tell us your journey, how you started and how you found yourself in this fintech space.
Thank you again for having me. So my journey started in 2014, back in campus. I was studying Bachelor's of Commerce at University of Nairobi. And during that time is when also platforms or e-commerce platforms like Jumia were booming. And I got intrigued with that because at that time, our lecturer gave us an assignment to do a dummy e-commerce platform or an assignment. Yeah. And at that time, I remember in our class, from the assignment that I did, it emerged number one. Mm-hmm. And my classmates were approaching me to ask me how I did it and if I could teach them how to do something similar. And at that time, some of them were willing to extend a token for the help. And something based on that triggered an idea. Why don't I get to understand more about e-commerce and the internet? So I used to find myself skipping some lessons, going to the computer lab, just teaching myself, the internet, doing business online. And at that time, in 2014, I started one startup called Place Express. So Place Express basically was a platform that was giving people information about businesses online. Okay. And with that experience, going out, trying to talk to businesses to sign up, I just felt like that's where I belonged. And I didn't mention, in campus I was studying finance. Okay. So immediately after going out and talking to people, getting that challenge and having that experience, I just saw I want to combine my finance knowledge with what I was learning online to still go on and pursue this even after campus. So tracking down up to where I'm right now, I've founded 6 startups.
Oh, wow.
Yeah, exited 2 in sales, and the others have failed, but you learn. So based on that, that's where I found myself now in fintech and also at EatOut. So at EatOut, I've been there for 3 years, and I took over the role at the time of COVID. And we've just scaled it from, the COVID times, because EatOut is in the industry of food and drink, which is restaurants. And you understand, during COVID, this industry was very affected. So when I joined, things were not good, but after the lockdowns and the restaurants reopened, we just took up the challenge to get the business back.
How many of the 6 startups that you founded were fintech in nature?
So 2 are in fintech, actually the ones that succeeded. And this is just coming out of the learnings of what the consumers want. Once you get to understand really consumers' preferences and what they're looking for, because right now, preferences have moved to convenience. And if you look at what fintech is solving, because fintech is just putting technology to deliver and use the technology in delivering finance services. And this is targeted to what people actually want. People want to pay, people want to send money, people want to transact. So one was called Moot, and basically Moot was a platform whereby everywhere you go and shop and pay, you earn some loyalty points, and you get to convert these points to M-Pesa cash. So it is something that was very successful. Yeah.
Mm-hmm. Well, David, people want to transact, like you're saying, people want to get paid, to pay, and all that. In Africa, there are a lot of areas that can be disrupted. We're talking about healthcare, we're talking about transport, e-mobility, for instance, we're talking about ed tech. How comes, when it comes to Africa, a lot of founders are really interested in getting to the fintech space? I have to ask that.
That's a good question. You need to understand where we are as Africa. If you look at countries like that are in Europe or Asia, these are countries that advanced a long time ago when it came to payments. But once you come to understand where we are as Africa, we are catching up. Okay. For example, in Asia and Europe, card payments are dominant. But if you look at Africa, we are not going that route. For us, we've gone the route of mobile payments. And in figures, in the entire continent, Africa is leading with over 40% of mobile money transactions. Okay. But in Europe, more transactions are on card-based. So if you look at why mobile money is dominant in Africa, you get to really understand it's solving the challenges that we have as Africans. And this is because of, fragmented infrastructure. For example, people in Turkana, there are certain infrastructure they don't have. For example, they don't have internet. And even before I dig deep into it, look at COVID. When COVID came, we got restrictions like you have to do your payments with mobile money. We have to move from cash. And so we're also moving to a cashless economy. And that's why even platforms like M-Pesa have really succeeded, because they bring the ease and convenience, and they're also affordable irrespective of your income. So Africa, we are solving our own challenges. And right now, if you look at the industry, startups are coming up. And these are startups that are really disrupting the challenges that we have. And that's why even investors right now are focusing more on fintech, because they are solving the challenges of Africa. Yeah.
And don't you think by investors focusing more on fintech, we have some rogue founders who might take advantage of that and squander investors' money? We're talking about, I'm talking about the short lifespan of some fintech companies, some even in the country, who've had run-ins with authorities. Just the other day, the Assets Recovery Authority had a very big case with one that I won't mention. But what can be done in that space to ensure that it is streamlined and we get rid of the rogue elements? From your perspective?
Yeah, sure. As I mentioned, we are catching up with this technology. And so with this, there are certain things also we are learning. I do acknowledge that there are some founders who may go rogue, even when it comes to raising money. But again, it goes down to really what is their vision. Because at the end of the day, if this is a founder who their vision is solving a problem that they've seen in Africa, then that goes down to even the principles of, them operating. In most cases, you'll find some of these founders don't have the background of running businesses. So, when it comes to that point where, they get attention and they have interest, then they don't really get to see the bigger picture. I'll give you an example. Today I was watching a documentary of the founder who started Flutterwave and Andela. If you look at his story, this is somebody who, from where he's coming from, the town, this is an area where the economic level is very, very poor, even in terms of infrastructure, the roads and everything. And this is Lagos. And so what he did, because he realized that close to the University of Lagos, there was a lot of young people who had the push and the drive to really make a change, not in terms of enriching themselves, but a change to get out of where they are. And he started Andela. He started giving knowledge to the young guys. If it was giving them the resources, things like computers to do learnings, and it blew up because more people were even getting the knowledge to work in different companies, even going abroad to work in abroad companies and coming back to bring that knowledge and experience to enrich their community. So it just goes down to what's somebody's vision. And if you look at right now, especially in Kenya, there's a lot of support that is coming in because we have accelerators, we have incubators, we have investors who are focusing on Nairobi. Actually, if I can quote one investor, Vusi Tembakwayo, if you look at one of his from South Africa, if you look at one of his interviews, he actually said he loves founders from Kenya, because these are guys who really understand what they want and they they go down to really give it the effort to achieve it. Yeah.
Well, as we appreciate what founders are doing to solve some of the unique problems that we face in the African context, you founded two fintech startups.
Yeah.
And I can assure you that right now, probably someone is watching this show and they're thinking of how they're going to come up with another startup. In as much as we appreciate that, one would argue that what we are facing right now in Africa is not really disruption, it's a fintech eruption.
Yeah.
Don't you think we might create some sort of bubble and then get to the point where the center no longer holds and the whole system crumbles?
I see where you're coming from, but I don't think so. There's a lot of opportunities. Actually, right now, how we are looking at it is when it comes to fintech and payments, we are just 1%. So there's a very, very huge opportunity in this space. And if you look at fintech, it's also very broad. We have payments, we have, startups that are doing things like buy now, pay later. We have startups that are focusing on things like lending. We have startups that are focusing on things like insurance. So it's very, very broad. And at the same time, that's where actually we should be focusing on, because if you look at Silicon Valley, it's a hub of many startups, and they didn't get there because of, of a bubble or anything.
Yeah.
Competition is good, and that's how we grow, because these opportunities at the end of the day create jobs, also create improvement of the economy. So I'd say, let's see where this is going. We have big companies like Visa, who has come to set up a hub in Kenya, in Nairobi. Actually, the hub is in Nairobi.
Yeah.
I had a chance to go visit them, and they have amazing innovations that they're looking to co-create with startups in this region. So I'd really say that the opportunity is wide. This market is very wide. And these are startups that are coming to solve our challenges. And if we don't solve them, nobody will for us.
Let's talk about financial inclusion. And as you rightly put it, they're coming to solve our unique problems. Let's talk about financial inclusivity. In my intro, I mentioned that the fintech startups in Africa mostly want to have the underbanked or the less, or people not in the banking system come on board. How are you doing that in the African context, and what criteria do you use when you're coming up with such products to help them? Do you do research to find out if these people want solutions that use USSD, for instance, or mobile applications? And if it's applications, Android or, iPhone users,
Yeah.
what is it there? Play Store?
Yeah, Play
The Play
Store.
Store. What kind of research do you do before you come up with a good product that will have everyone on board?
I'll take you back to where transactions started. And this is over 200,000 years ago, where the mode of transactions was barter trade, whereby if I have, for example, maize and you have tea, we come and trade. But if you look at how that happened and where we are, there's a lot of improvements that happened. And when COVID came, it really taught us that, hey, you know what? There's a lot of innovations that you can adopt. And if you look at also the audience, right now, we have a youthful continent. These are guys who are tech savvy, the internet has penetrated. And also moving forward, it goes down to people getting the convenience of interacting with solutions at their fingertips. And so with this, even before we went cashless, we had mobile money that all for you to transact, you only needed a SIM card. Okay. But right now, we are moving to the digital age, where even the banks themselves are adopting. Actually, in a recent, I think it was the release of some financial year results of a bank, the CEO said that it is expensive to have you as a customer visiting their branch, because number one, they have to get tellers, pay them a salary. But if you look at somebody sitting at home and doing their transaction from the phone, it's very, very convenient, and it's cheap for that bank. And with this, I foresee in the future that banks are going to be on mobile. Some of them will even close their banking halls. So this shows you that it's about what people are seeing. And yes, there's some research that goes into this. I remember in 2020, a manager at Equity said almost over 80% of their transactions were not happening at the banking halls. They were happening on mobile money. And so with this, people want to tap into that because we have a youthful continent, and these are people who are tech savvy, and it's becoming easy with internet penetration and also smartphones being affordable. So this is something that, looking forward, we're going to be accessing your money, doing transactions on the phone, because that's where we're heading to. Yeah.
David, and let's talk about regulation, because as technology evolves, regulation also evolves. I'm thinking you come up with a great product that solves a particular problem, but then again, legislators sit down and come up with new regulations. For instance, right now, what regulations, regulatory challenges are you going through, and how are you navigating to get to the point where you want to be?
That's a good question. So how we look at it, regulation is not a bad thing. Actually, I was interacting with a lawyer who has been looking at some of these cases. And one of the things she told me is that these regulations are not here to kill or to cause a block for innovation. They're here to actually support them, because what you said, founders, there are some founders who are in this for just for money. I'll give you an example. For example, yourself. Let's say you have money in your mobile wallet, and tomorrow morning you wake up, it's not there. What are you going to do?
Oh.
So yeah, you understand.
I thought you were using my example as a founder. Go ahead. Yeah.
So these policies are coming to create a condition to support this innovation.
Okay.
Because without them, trust me, so many things will be happening. For example, fraud. Again, data. Every time you're doing a transaction, a lot of data is captured, and you don't know who is handling that data. So imagine one day you're just sitting and you get so many notifications from nowhere, yet you don't know where you even gave out your data. So these policies are here to support innovation and to ensure that even these innovations that are coming up are created in a certain way that are serving you and not using you. Yeah.
Well, and finally, you have experience. You've founded two fintech startups.
Yeah.
Let's talk about young startup founders now. Guys who are probably starting their own fintech startups but are currently bootstrapping. What can you tell them if they're watching this show? What advice can you give them to raise funds?
That's a good question, because it takes me back. I'll use my example from the experience I've gotten in my journey. So bootstrapping is not a bad thing. And bootstrapping actually is a good way to show investors before you approach them that even by yourself, you've gotten out to invest in this business by your own. And by bootstrapping, this also gives you the opportunity to learn, because in many cases, you'd find this a first-time, let's say this is a first-time founder who doesn't have experience in the domain where they're getting in. Too. So you're going out there, even if you need to get a job or do some consultancy, that money that you are getting, yes, will go into funding your idea, but at the same time, you are learning. And this also goes down to what we were saying in terms of the roadmap of a startup. It's not that you wake up, you have this idea, then a week later, it's out there making money. There is a journey. You have to go to the market and test your idea, because you need to go to test, put the product in front of the customers that you're looking to serve. You need to put the product to the test if it's working okay. So bootstrapping is not bad, but my advice to that will be, after you bootstrap, of course, if you want to scale, because at the end of the day, you want to take your startup from point A to a higher peak. You can look out for accelerators who are willing to come in and mentor you, give an advice, and they also happy to come in as angels, because right now in Nairobi we have an association called NAIBAN, which is Nairobi Angels, who are willing to come in on a small capacity, especially given their expertise in the industry. And if they like your idea, they're happy.
Just the fintech industry, or it cuts across?
It cuts across.
Okay.
Yeah. So we have angels who are willing to be your first backers. They'll give you something small, probably to help you get the product market fit, as you're going out to get your first customers. And then from there, you now progress to VCs who now can come in and help you to scale. So it's a journey. It's okay. I've been there before. So it's not a bad thing to bootstrap. I'd actually encourage it, because it gives the confidence to somebody who you're approaching to give you money, because they look at it, you've already invested in this by yourself, and you understand what it takes to manage your money and how you'll manage somebody's money.
Well, thank you very much, David Olilo, for that.
Thank you so much for having me.